I often receive requests to make video on advance import payment, RBI rules, regulations, and also process and regulatory requirements. So let's understand about the process and requirement for advance import payment made from India to other countries. So to understand advance payment, first of all, we need to understand what is import and why people do advance import. So what is import? Import means is a goods and services that is bought in one country which is produced and sold from another country. If we ask in a layman that if we are buying goods or services in our country, it means that goods or services has been produced in some other country, and from that countries it is being buy from our country. Means we are buying goods and services from other country to our country. If any entity wants to buy goods and services from other country, that entity needs to follow some rules and regulations. So here we will understand requirement, process, and also the rules and regulation and regulatory requirement related to advance import payments. So here we will take the example for import. For example, ABC is the company which is in China, and from India XYZ company which wants to import electronic, and that entity wants to buy that goods because that electronic products is cheaper in China, and to sell in India, that entity XYZ in Indian entity wants to buy that products from China which ABC is producing. After verifying all details, XYZ entity has satisfied about that entity and wants to buy that goods. So to buy that goods, entity in India needs to be aware about the rules and regulation about the process. First of all, they need to aware about that entity means exporter who is exporting that. Second, what they need to aware? They need to aware about the guideline about our country, about the import. So import guideline they must be aware. Third, what is the document requirement? The document, so what kind of documents required? That entity must be aware about that. And another, regulatory closure and requirement. So must be aware about that process and closure. Whatever the import you are making, you needs to also close that outstanding. So all these things we will understand in detailed video. So here we understand about the import. So now let's move to understand what is advance import. So advance import means a payment method in international trade where the importer pays the exporter for goods before they are shipped. Means any importer, like any, for example, any entity in India wants to buy goods from other country, and that importer had decided to make payment before the shipment of goods, that payment term will be called as a advance payment. And why these rules and regulations require to make advance payment? Because advance payment is extremely risky for any entity in India making payment to other country. Why? Because you must be aware about the risk involved in making advance payment. Maybe you made some scam and fraud, you will make the payment and that entity doesn't exist. So you must be aware about the KYC about your party who is going to sell the goods or services. Even you must aware about that country as well. Maybe that country comes in high risk, and after getting payment, that country will not allow to sell goods to other countries. So there are certain rules to prevent these risks. RBI has developed some guidelines to make sure that any entity who is making payment to foreign country must be safeguarded, and that responsibility has been given to AD Category 1 bank. AD Category 1 bank is the branch of any bank who is authorized to handle foreign exchange transactions. So here any rules and regulation RBI has made that must be followed by the AD Category 1 bank in the India. So here let's take some example as well for advance payment. Imagine you are buying an item online. If the seller requires you to pay upfront before they ship the item, that is an advance import payment. So you are essentially paying in advance for the promise of receiving the goods later. Means only on the promise of that you will receive the goods, you are making payment to the seller. On and even on the day-to-day activity, you are making payment, advance payment you are making to the seller, and after receiving the payment, seller is dispatching the goods. This is the common example of the advance payment. Similarly, in international market also we can take one more example. An importer ABC in Delhi wants to buy machinery of US dollar 1 lakh from a manufacturer XYZ in Germany. Okay, the payment term is 50% advance and 50% after 60 days from the BL date. So what they will do, the importer, after verifying the manufacturer reputation, makes 50% as an advance payment through their bank. So this allows the manufacturer to start production to ship the goods. So any term, for example, if you are going to buy some machinery and that supplier is also very serious and that supplier wants to make sure that you are going to buy that machinery, the supplier may ask to make the payment, some advance payment, so that that supplier will cover that initial expenses to make that machinery. So for example, in this case, buyer importer has made the 50% payment as an advance to manufacture that machinery, and 50% is 60 days after BL date. After receiving 50% as an advance, supplier will start manufacturing this machinery, and after completion of the manufacture, supplier will ship the machinery to that importer, and once the importer will receive, importer will make the payment as per the contract 60 days from bill of lading date. So that transaction will get complete, and once goods will receive to importer, importer will make the payment, and also importer will submit the import proof to their AD category 1 bank to close that the importer has made the payment, and that payment is showing in outstanding that on IEC, import export code of the importer. So that importer has, it will show that importer has made the payment to other country for import of some machinery, and till now it will show outstanding. Once the importer will submit the bill of entry, proof of import, then that outstanding will settle, and that will not show in outstanding from going forward. Okay, so let's move the reason. What is the reason for advance import? Why anyone is going to make advance payment when they are not sure that that party will ship the goods or not? It's a kind of risky. Maybe that party will not be able to fulfill their requirement, or in a lot of risk involved. So first let's understand what is the reason behind why any entity is taking that kind of risk. First, competitive prices. Maybe in that country there are prices are extremely cheaper, and supplier is not ready to ship any goods before receiving the payment. Maybe there is some condition where supplier is asking 100% advance payment. For example, any party is asking to buy $1 lakh goods, and the supplier is saying, yes, I will be able to supply that goods only upon receipt of $1 lakh in advance. So after receiving that payment, because they are selling that goods at a very cheaper price, and also many entity is following with them, they are in advantage position where they can bargain that terms of advance payment. Here the supplier is in a position where supplier can ask that, yes, I am giving you best price, so I will receive the payment, then only I will be able to ship the goods. Secondly, what will be the major reason? Availability of goods. For example, that goods is available in specifically in that country or that supplier, and then supplier is in monopoly position where supplier will sell the goods, supply the goods only upon receipt of 100% advance, or a specific term 50% advance, 30% advance, whatever it is. Means here supplier will ask that, yes, I only have a goods, so if you are making payment, then only I will be able to supply that goods. So what will be the another third reason? Trust issue with the unknown buyer. Here maybe the buyer is very small and no one is aware about that buyer, and supplier is not going to take risk. What supplier will do? Supplier will ask about the payment from the buyer. Yes, I am not aware about that. You must make the payment first, then I will be able to supply that goods. So this is the major reason here. Again, risk in buyer country. The buyer country is in extremely risk zone where supplier is not going to take any risk and to supply the goods before receiving the payment. So here supplier may ask that yes, you have to make the payment first, then only I will be able to supply that goods. And big and well known seller, in some cases seller is very big and well known, they may set their terms and conditions to supply the goods only upon receipt of the payment. So they have made their own choice that once they will receive the payment, then only they will be able to supply the goods. So these are the main reason why any entity will choose to make advance payment. So here we will also try to understand what is the process once anyone is making payment, how the process will flow. So here once any entity will make the payment to seller, what seller will do? Seller will dispatch the goods to importer. Once seller will dispatch the goods, seller will prepare the document of the dispatched goods, and that seller will dispatch the document as well. Why the seller will dispatch the document? Because suppose dispatch of the document, buyer will receive that document, and on the basis of that document, the buyer will be able to release the goods. So here the document is very important. Receiving the document, what buyer will do? Buyer will file the bill of entry, because bill of entry is the custom portal where buyer or agent of the buyer has to submit the information of goods which is going to come to that country. So buyer or buyer agent must file the details on custom portal ICEGATE for reporting purpose. Once the goods will receive, custom will inspect the goods with that filing. Once custom will inspect all the details, and they will decide the duty and charges that is required to pay. After making payment of duty and charges, importer will be able to release the goods, and once they will release the goods, importer can take that goods to their warehouse. So this is the process after making payment. It's not that you will make the payment, you will receive immediately goods. There are multiple certain process, and these are the process where you will finally get your goods. So here mandatory requirement for importer. If you are importer and first time you want to import some goods, so you must be aware about the requirement. For what is the requirement? You must have a PAN card. If you are going to buy goods or services for a business purpose, you must have a PAN card for that entity. Also your entity must be registered. And what is the another requirement? GST number. You must have a GST number, and also account and AD code. You must have an account with the bank, and also that bank have a AD category 1 branch, and that branch must have a AD code, because AD code is required to file all the import and export related information. And last one is IEC code, import export code. You must have import export code to be eligible to import or export goods or services from or to India. So this is the basic requirement, mandatory requirement. You must have these mandatory requirement before making advance payment. If you are going to make the payment first time for advance payment, there are certain things like request letter required. In request letter, there are certain information required about the party and process. Then IC copy, if it is first time, then IC copy is required. Invoice, PIPO, for which contract you are going to make the payment, so that your AD category 1 bank will try to understand your terms and condition, also will try to understand your which kind of goods you are making the payment, whether that goods is allowed to import or not. They will check with that PI or PO, performa invoice or purchase order. These are the full form. FEMA declaration, this is also the one time you must be aware. It's a declaration that you are aware about the process. You are making the payment, you must be aware about the guidelines, rules and regulation under FEMA, Foreign Exchange Management Act. So these are the declaration and requirement you must be aware making the advance payments. Let's understand what kind of information they can ask. Every bank have their own request letter. So let's check what kind of information they can ask. So here they can ask first importer, means buyer detail. Who is importer? You are the importer. So your details, your name, account number, name, address. These are the details. IC code. So these are the details required for importer. Similarly, exporter, what is required? Name, address, bank detail, where they are going to make the payment. Okay, goods description, what kind of goods you are going to buy, HS code, harmonized system code. This is the code which is required to declare whether this goods is permissible or not to buy in this country. So this is the required. Also they will try to understand the payment term. So payment term means what kind of term you have decided with your party. This is the very, very important term. Why it is important? Let's understand first. So payment term is why important, because this term will decide who is going to take that responsibility and also the price of the goods. For example, if seller is saying that you will take the goods from their warehouse, okay, means what they will do, they will make available goods to their warehouse. And for example, in China, okay, Shanghai, the goods is available at seller premise, and what you will do, you will take that goods from their warehouse to your importer warehouse. So here what will be the charges? You are going to pay all the charges. For example, $1 lakh, they are saying that this is the price of the goods, $1 lakh you must pay for that electronic item, and you will take the goods from their warehouse. So this is the charges. So X works. This input term is X works. What will be the term? X works. That will be used for, because it shows, X works shows that you are going to take all the responsibility from their premise, seller's premise to your premise. You understand? So here the charges will be less, because 1 lakh charges only for the price of the goods. So if you are taking any Incoterm which the seller will deliver that goods to your premise, for example, DDP, delivered duty paid, means seller will deliver the goods and also pay the duty, means seller will take the goods from here, pay the duty for importer country and supply that goods to your premise. So what will be the charges? Charges will definitely get increased, because the transportation charges involved, insurance charges involved, also duty taxes is involved, that will make increase. So price will get increased accordingly. So price and also responsibility is totally depend upon the Incoterm. What kind of Incoterm you are choosing? If you have, for example, if you have chosen delivered duty paid, DDP, means the charges will be high. For example, all the charges include 20,000. So what will be the final price? $1,20,000. So here the price get increased just because there are multiple transportation charges, insurance charges, duty charges. These are the charges included in that. So that is why charges got increased. So you must be aware about the Incoterms. So payment terms we are aware. Advance payment. Advance payment, you are making a payment advance to the party so that the party will supply the goods. Why you are making the payments? Because supplier is not ready to supply the goods before receiving the payment. So you are aware. So first you will make the payments. Once you will make the payment, then supplier will start making the goods or supply the goods. So now we will try to understand what kind of checks importer must be aware about before going to make the payments. First, identify goods or services for import. First, any importer, if you want to buy goods, first they must be aware about the kind of goods they are going to import. When that importer has decided that he is going to buy that goods, he must check that HS code, whether that goods is actually allowed to import in that country or not. If that goods is not allowed, then he must obtain that license from the government to purchase, to import that goods. So this is the also requirement is very important. The buyer must be aware about that. After deciding which kind of goods buyer is going to buy, and after checking HS code, whether that goods is actually permissible to buy in this country or not, then what buyer will do? Buyer means importer will do, identify the country and which country is actually secure to make payments for advance, because there are multiple countries which comes in the risk list, and if you are going to make the payment, you are going to take that risk. Maybe after making payments, that country will not allow to sell any goods outside that country, or they will not allow to even refund that amount if you are making payment and that supplier is not going to supply that goods. So it is advisable to cross check that country as well. After that, what buyer will do? Buyer will finalize the seller. From which seller, after deciding the country, from which seller buyer is going to buy that product, that goods, because the seller is also plays the very important role, not only the country, because if you are making advance payment, you must be aware about that seller. That seller have a good reputation, that if you are making payment, that seller will definitely supply that goods. So you must be aware about the seller as well. After that, you need to decide the Incoterm. So basically, Incoterm is the term which decide for importing the goods who is going to take responsibility from where. Means if you are taking responsibility, for example, if buyer is buying the goods from the supplier's warehouse, so Incoterm will be X works. Means supplier will make available goods at their own place and buyer has to take the responsibility of taking that goods to their own place. So there are a lot of risk and responsibility involved in Incoterm. So you must be aware about the Incoterm. So let's take some example to understand the Incoterm as well. X works means the Incoterm which allow the exporters to available the goods at their own place. Means from the exporter place, all the charges and responsibility will be borne by the importer. So importer must be aware about the Incoterm. For example, similarly, so I am taking example of another Incoterm, DDP, delivered duty paid. Here means exporter will deliver the goods at the buyer importer place. Not only the deliver the goods, he will pay the duty as well. So after delivering, he will pay additional every charges for even transportation, insurance, if require insurance. So all the charges will be borne by the exporter. So what he will do? Exporter will take the goods and deliver at the importer place. So buyer must be aware about whether he is capable to take the goods from the exporter place. If he is not, he must take the Incoterm as per his convenience. So he can take the responsibility of goods accordingly. So here I have taken example of X works and DDP. This is the extreme. X works means only importer will take the responsibility of all the transportation. Here exporter will take the responsibility, and DDP. There are total 11 Incoterms are there for the importer and exporter to decide which terms suits for them. So I have made separate video on the Incoterm. You can go and check that Incoterm and you can understand that process. Here I have just only taken example of 2 Incoterms to make you aware about that. So importer must be aware about the Incoterm and their actual requirement. After deciding Incoterm, buyer needs to decide the payment term as well. Here we are discussing about the advance import payment. In advance payment as well, buyer can negotiate that if supplier is asking 100% advance import payment, so buyer can ask, yes, 50% I am making the payment. Once you will ship the goods, I will make the rest payment of 50% as well. So he can bargain that. So advance payment means you are as a buyer, you are making a full payment or whatever the terms, 50%, 40%, 30% of the contract value in advance before shipping the goods. Hope you understood the checks points for the importer. We will understand related to services. What kind of direction RBI has given for advance payment against import of services. So let's read. First, AD category 1 bank may allow advance remittance for import of services without any ceiling, subject to the following condition. What is the condition? Where the amount of advance exceed $5 lakh or its equivalent, a guarantee from a bank of international repute situated outside India, or a guarantee from an AD category 1 bank India, if such a guarantee is issued against the counter guarantee of a bank of international repute situated outside India, should be obtained from overseas beneficiary. So any entity which is making payment against import of service as an advance and that limit is breaching of $5 lakh, then that importer must obtain bank guarantee and SBLC from the foreign bank. What is the next condition? In case of the public sector company or department undertaking of the government of India, state government, approval from the Minister of Finance, Government of India for advance remittance for the import of service without bank guarantee for an amount exceeding US $1 lakh or its equivalent would be required. So again, here the limit for government entity, if that entity is making import advance payment against services, if the limit is breaching of $1 lakh, again bank guarantee or SBLC required or waiver from the Ministry of Finance is required. What is the next condition? AD category 1 bank should also follow to ensure that the beneficiary of the advance remittance fulfills his obligation under the contract or agreement with the remitter in India, failing which the amount should be repatriated to India. Means AD category bank needs to follow that if any advance payment has been made to the foreign country, foreign supplier, then that services has been taken. If that service has not been taken by the importer or buyer in India, then the payment needs to be repatriated to India. And if it is not happening, again AD bank has to report to the RBI. So these are the RBI direction for the import of services. So for any entity is making payment up to $5 lakh, there is no requirement for bank guarantee or SBLC. If that limit is breaching, then there is no waiver and that entity has to provide bank guarantee or SBLC from the foreign bank. This is the direction given by the RBI. Hope you understood. So let's read the risk as well involved in the advance payment. What kind of risk? First is non-receipt of goods and services. Means if as an importer you are making advance payment to the foreign country and if that supplier is not able to manufacture that goods, there is a risk you have made the payment and still the supplier is not able to supply that goods. So what will happen? This will create another risk that you will not get the goods or services. If you are making payment, you must be aware about these rules that supplier may not be able to supply that goods or services. What is the another risk? Fraud and scams. Maybe if you are not sure about the supplier or you are making payment to a supplier that is selling the goods at a very cheaper price and without inquiring that supplier you are making payments, you may meet with the fraud or scam that you are making payment and that supplier even does not exist and your payment will get stuck and you will not be able to get goods or services against the payment you are making. So before making payment, you must be aware about these things as well. What is the another risk? Quality of goods. You are making payment for the specific quality of goods that is available in a specific country only, and after making payment, once the goods has reached, you observe that that quality is not available in that goods or services. For that you have made the payment. You must be aware about these risks as well. What is the another risk? Political and economic risk. If you are making payment and that country is not stable as an political and economically, your payment may get stuck and you will not be able to get refund or goods or services as well. What is the another? Foreign exchange risk. Means you are making payment and maybe due to the currency exchange you may lose the value. For example, if you are making payment of US dollar and dollar is extremely at high, for example 85, 88, for example we are taking as an example 85 rupees and you are making $1 lakh payment to supplier that cost you as 85 lakh rupees. At the time of supplying, after 2-3 months, dollar exchange rate has reduced to 80 rupees. So what will be the actual price? That will be the 80 lakhs, because now the price of the dollar is 80 only and you have made the $1 lakh to that supplier at the time when the value of $1 was 85. Means you have paid the 85 lakh rupees which actually have a 80 lakh value. So you must be aware about the exchange risk as well. So these are the risks involved in advance payment. And in the last I have kept this regulatory closure because this is very important. Not only as an importer, as a banker as well, you must be aware about the requirement. So what is the requirement? Physical import. If you are making physical import of goods, so what is the requirement? Bill of entry submission, means proof of import. Bill of entry is the proof of import that so that whatever the amount you have paid as an advance or against import, that goods has already been received to you and you have submitted that proof to the bank. And if you are making payment against services for non-physical import, so what is the requirement to submit the proof of import? You need to submit the certificate from the CA. So that will be certified by the CA, chartered accountant. Your chartered accountant will satisfy that yeah, actual the services has already been taken by you, for which you have made the payments to the supplier. And what is the next? Refund of non-import goods or services. And in case the goods or services has not been supplied by the supplier, what is the requirement? You must seek the refund from the supplier that yes, you have not supplied that goods or services. You must return the money. As an importer, you must be aware about that, and also you need to submit the proof. Once the payment has repatriated to the country, you need to submit the proof to the bank that payment has been returned, and this is the proof. Then what bank will do? Bank will close the outstanding amount, that the amount has already been refunded. So this is the process, this is the regulatory requirement. Hope in this video you have understood about the RBI master direction. Not only the master direction, also I have tried to explain about the risk, process and other requirement related to advance payment. Hope if you have liked this video, please like and subscribe. Thank you everyone.